Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. Past guests include Brooke Reuter, talking about contract for deed versus lease to own options. Scott Reeves, the Chickasaw Community Bank, talking about commercial banking options. And I recently spoke with Will Gilbrecht of Franklin Heating and Air in Northwest Arkansas about all things heating and air, including why home warranty companies are not great for homeowners or investment property owners. Today's episode is brought to you by Chris Lyle State Farm. Chris Lyle State Farm helps you protect your most precious assets and investments. Whether it's your home and auto, investment rental properties, or other valuables, call Chris Lyle's State Farm for a quick and painless phone call to potentially save you double digits on all of your insurance needs. Visit diallyle.com. That's diallile.com, or call his office at 918-878-7771. Today's episode is also brought to you by Keyrenter Property Management. At Keyrenter Property Management, we're a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. Listen, Jay, you're as familiar as anybody with the importance of relationships in our industry. It's the middle of the summer and electricity goes out at a rental property, shutting down the AC. There probably isn't any worse situation or time that for maintenance to arrive at a home like this. It's important to have the relationships that allow you as a property manager or the property owner to get some help out there as soon as possible to solve that issue. It's not easy, but it's how we've built our business and our reputation, through reliable, trustworthy, and responsive vendors like Michael that light it up if it were an electrical issue. That's why no matter what rental you have, single-family homes, condos, townhomes, apartments, we have the management solutions that you need. Go to keyrenterpmc.com or email us at info@keyrenterpmc.com. Today's guest almost needs no introduction, but I'm going to do it anyways. Jay Conner, he's a real estate legend. He's been buying and selling houses since 2003 in a population of only 40,000, with profits averaging 71,000. That's Morehead City, North Carolina. Jay has rehabbed over 450 houses. He's been involved in over $52 million in transactions. And for the past 7 years, he's completely automated his seven-figure income business to where he works in his business fewer than 10 hours each week. He's consulted one-on-one with over 2,000 real estate investors, and he's raised a ton of money from private lenders. We're going to hear all about private lending today and how it's different, how private money is different than hard lending, and why it's where you need to be raising your funding for future deals. He's a national speaker on the topics of private money, automation, and foreclosures. He's also a best-selling author of Where to Get the Money Now. He's a podcast host. You can find his podcast called Raising Private Money with Jay Conner on any of your favorite podcast spots. That's Deezer, Spotify, Apple Music, etc. He's also a past president of Business Networking International. And as I said, he and his wife, Carol Joy, reside in Morehead City, North Carolina. Jay, welcome to the show. Happy to have you here.
Hey, Matt, thank you so much for inviting me to come on and talk about my most favorite subject that I'm so passionate about, and that is private money. Changed my world all the way back in 2009.
I love it. So many of our listeners are familiar with traditional banking, right? That might be conventional. It might be commercial terms, and of course, I want to hear about your background and how you got started in private money. But before we do that, can you give our listeners a quick rundown of what private money is?
Yeah, I'm glad you asked, because let me tell you what private money is not. Private money, in my context, in my world, I'm not talking about hard money lenders. I'm not talking about brokers. I'm not talking about any kind of institutional money. Private money, or a private lender, is an individual, a human being, just like you and me, that loans money to us real estate entrepreneurs, either from their investment capital, just liquid investment capital, and or their retirement funds. That's a big one right there. In this world of private money, it's important to learn about self-directed IRAs and what they are. And in essence, what a self-directed IRA is: an IRS-approved company, also known as a third-party custodian, that allows an individual to transfer over a current retirement fund account or a portion of it to a self-directed IRA company. No penalties, no taxes, no tax effect. And once that money's moved over, typically takes 2 weeks, then they can be a private lender with those funds and be a passive real estate investor and earn high rates of return safely and securely. So a private lender is an individual loaning money out to us, real estate investors, either investment capital and or retirement funds is what they're using.
Is this the same as the way people that sell life insurance policies talk about velocity of money, that you put your own money away for years and years and years, and then eventually you can borrow against that, I guess the liquidity that you have in that retirement, in that life insurance policy, or is this 100% different?
No, this is 100% different.
Okay.
So every deal that we do, so the way I do private money is everything is, so I'm in single family houses. I've rehabbed about 475 houses funded with private money. And the way it works is everything we do is what's called a one-off. So what's a one-off? Well, a one-off is different than what's called syndication. So a syndicator or a syndication is someone that goes out and raises private money from individuals, and they invest in a fund. And they're going to get a return off of that fund, or they're going to share in the profit on the backside of that fund. You typically syndicate for commercial property, right? Apartments, large apartment deals, right, or commercial buildings. In this world of single family houses, it's all one-offs. So what does that mean? That means you have a private lender or a couple of private lenders that loan money secured by that single family house that the real estate investor is buying.
Right.
So one-offs, you got a private lender, you got a property, and we're not borrowing unsecured money. Every promissory note is being backed by the real estate that we're buying. That note is backed by that real estate.
Let's back up a minute and talk about how you got started in this business, down this path of private money. What catalyzed this?
I can tell you how I didn't start. I just didn't start when I wake up one morning and say, hey, I think I'll go raise some private money. I never heard of private money until I had been in this business, investing in single family houses for 6 years. So Matt, I tell you, I remember like it was yesterday. It was in January 2009. My wife, Carol Joy, and I, we'd already been investing here in our local area for 6 years. By the way, we're in a small market, only 40,000 people in our small market, but we do 2 to 3 deals a month. Average profit is $78,000 per house. The only reason I share that is the moral of the story is you can make big money in a small market, right? But anyway, so I had been funding my deals for 6 years at the local bank here in Morehead City, North Carolina. And I've been doing business with the same bank, the same banker. And so it was January 2009. I had 2 houses under contract to buy. These 2 houses represented over $100,000 in profit off of these 2 houses. So believe it or not, Matt, here in Eastern North Carolina, we actually still have handsets with cords attached to them, if you can believe. Some people don't even remember what a handset looked like, But I picked up the phone here in my office and I called up my banker. His name was Steve. I had this conversation with Steve many times for 6 years. Called him up. I told him I had 2 houses under contract to buy, told him where they were located, and the funding that was required for the houses. And then my banker went silent on the other end of the phone, which is never a good sign.
No.
He cleared his throat. He says, Jay, I'm sorry, but the bank has closed your line of credit. You no longer have a line of credit for single family houses.
Wow.
My first thought was, I sure wish you had called me before now and told me that you had closed my line of credit before I went out and put earnest money on 2 houses. And back in 2009 here in North Carolina, you couldn't get it back when you had gone under contract. Anyway. So I had a great credit score, 800 credit score, a great relationship for 6 years. Well, here's the deal, Matt. I didn't know there was a global financial crisis going on until now. I got a crisis going on. Right. No way to fund my deals. So I hung up the phone and I sat here for a moment. My first thought came to mind and I said to myself, Jay, it's impossible for you to fail unless you choose to quit. Mm-hmm. Well, quitting was not an option for me. And so then my next question was, who do I know that can help me with my problem? So it's not what you know, it's who you know, right?
Mm-hmm.
So I had a friend. He's still a great friend. His name is Jeff. He lived in Greensboro, North Carolina at the time, and was investing in real estate. I called him up and I told him what happened. He says, "Welcome to the club, Jay." I said, "What club?" He said, "The club of losing your line of credit at the bank. They shut me down last week." I said, "Well, how are you going to fund your real estate deals?" He said, "Well, have you ever heard of private money?" I said, "No." He said, "You ever heard of self-directed IRAs?" I said, "No." So he told me the concept. Well, I started researching private money and learning as much about it as I could. So I put my program together, Matt. See, so don't miss this. I put my program together to teach individuals in my own market who I go to church with,
Right.
in my cell phone, at the Rotary Club, at the Business Network and International, all the groups. I put my own program together as to what I was going to do to teach them as to how my program works. So here is the first big key about private money and attracting hundreds of thousands of dollars and millions very, very quickly. You know, the old traditional way of borrowing money is you went to the bank, you got on your hands and knees, you put your hand underneath your chin, and you said, "Please fund my deal. Please fund my deal." Right? And they pull your credit and they want the verification of income and they're going to do the appraisal and all this stuff. Well, in this world of private money, we're not asking anybody for money. Matt, I haven't asked anybody for money, for private money, since 2009, and I've never pitched a deal to any private lender.
How?
And people say, wait a minute, Jay. How do you have $8.5 million of private money funding available to you at any time for your deals, and you never ask anybody for money and you never pitched a deal? Here's the answer. I put on my teacher hat and I separate the activities of teaching and raising private money from having them a deal to fund. So I learned at the very beginning, if I'm teaching somebody what private money is and how they can earn high rates of return safely and securely, and the interest rate that I'm paying and all that, and I bring up a deal in that initial conversation, I already sound like I'm desperate. I already sound like I'm begging. Like I'm saying, "Hey, I need funding for this deal."
Right.
So step number one is teach private lending to people in your own warm market. Like my program is I'm paying 8%. I give them a 90-day call option. They can get their money back early, et cetera. Now, so I teach it to them, right? It takes about 20 minutes using my PowerPoint presentation. So I teach it to them. It can be one-on-one or it can be one-to-many. I've raised $969,000 at one private lender luncheon.
Wow.
$1 million, you might as well say. One luncheon, right? Where I'm teaching it. So I get to the end of my presentation. I don't even have to ask them if they want in or they're interested. I just finish teaching it to them and shut up. Believe it or not, I know how to shut up when it's time to shut up, right? So I shut up. Well, if they've got investment capital or retirement funds, they're going to ask me, they're going to say, "Well, how do I get started?" And I said, "Well, how much do you want me to put to work for you?" Right? This is all about serving, right? Hey, look, in this world and this mindset, you cannot be rejected. How can you be rejected if you're not asking anybody for anything? So they tell me how much they got, they want to put to work. And I say, "Okay, great. I'll find you a deal just as soon as possible." So here's the other part of not asking for money. So let's say a week goes by, no more than 2 weeks, and I'll call them up. And so, Matt, let's say that you're one of my private lenders. I call you up, and here's the exact script. I say, "Matt, I got great news for you. I can now put your money to work for you." Now, let's stop right there. You've been waiting for the phone call. I told you I'd find you a deal just as soon as possible. So you've been waiting. And particularly, if I taught you about self-directed IRAs and you've transferred your funds over to the company that I recommend, you're not making any money.
Right.
With that money sitting in there, you're waiting for the phone call. So I call you up. "Matt, I've got great news for you. I can now put your money to work." Now, listen what I'm going to tell you about the deal. I said, "I've got a house over here in Newport." I'm not telling you the physical address because you could care less. I got a house here in Newport. The after repaired value is $200,000. The funding required for the deal is $150,000. Now, I know you got 150. Side note, you've already told me you got 150. You're waiting for me to put your 150 together. The
Right.
funding required is $150,000. Closing is next Tuesday. So you'll need to wire your funds to my real estate attorney by next Monday. I'm going to have my real estate attorney email you the wiring instructions. End of conversation. I didn't ask you if you want to do the deal. That's the most stupid question in the world I could ask. Well, do I want to do the deal? I don't know. Should I do the deal? Of course you want to do the deal, because I'm not bringing you a deal to fund unless that deal matches the criteria of my program, i.e., I don't borrow more than 75% of the after repaired value of the house. And guess what, Matt? I always bring home a big check because I always borrow more than I need to purchase. And if I'm rehabbing, and I may not be rehabbing, I mean, you're going to use private money whenever the seller requires all the cash, period. But in this world, there's no down payment. I never take any money to the closing table out of my pocket. I always bring home a big check when I buy. And who wants to get paid to buy houses, right? So talk about fixing your cash flow problem, right? And you can use private money for buying. You can use private money for refinancing, right? You can pull equity out of a property that you already own. It just puts you in the driver's seat of your business.
So let's talk about the actual mechanics. If you're in our business and we do buy and hold real estate long term, and I'll tell you, I'm closing on 3 houses today. The numbers look like this. Let's do a real example. We're buying them for 35. We're putting in 65. That's $100,000 total. They should rent for $1,100, $1,200. So I can borrow 85% of that entire amount. In fact, I'm only putting down 5,000. I should be. We're borrowing 15%. Sorry, we're putting down 15% of the acquisition cost, and they're funding the entirety. It must be of the renovation. So if you just say I'm putting down $5,000 and I'll end up with a property worth $100,000 that's financed otherwise, how would I do that using private money?
Sure. So I know you're going to buy and hold it. It's going to be a long-term rental, but we want to give the private lender equity based off of the after repaired value. Maybe there's not going to be any rehab or whatever, but based off of the value, if there is rehab, the after repaired value. So what would you say the value of the property is?
In this case, we know it. It's 126. We know it from the appraisal, whatever an appraisal is worth, quote unquote. We know it, quote unquote. So we call it 126 for this exercise.
Okay. So let's say the after repaired value is $126,000. All right. So I'm typically not going to borrow more than 75%, right? So I typically would not be borrowing more than $94,500. So that's coming up a little short on your example here, because you're buying it for, what'd you say, 30?
We're buying it for 35, putting in 65. If we needed to cut $6,000 out, we don't do can lights. We could do it. No problem.
Right.
We don't have to go as nice as we want.
So in this case, I would borrow with an after repaired value of $126,000. I would borrow from my private lender $94,500. Right. So in this example, cut out $6,000 worth of can lights. You got all of your purchase price up front. You got all your rehab up front, right?
Yep.
Now you're wanting this for the long term. So there's a couple of different ways to do it. So obviously you don't want to pay 8%. So I pay my private lenders 8%, right? So you don't want to pay 8% forever, right? So here's a couple of different ways. You can use your institutional money. So how much is your institutional lender loaning you?
I mean, it's not that far off. Maybe it's 7.25. Not far off from 8% anyways.
Okay. So one thing you can do is you can just keep the private lender there, but most private lenders are not going to want to do more than that 3-year or 5-year thing, right? Before they go to another property. So you can use private money for the entire purchase, for the entire rehab, and then you can just let it stay, let the note keep going, set it up for 3 years. If they want to renew, great. If they don't want to renew, of course, they never want their money back. How else are they going to earn money like this? They don't ever want the money back. But let's say they did after 3 years. So in that case, you could go to your institutional lender, refinance the property, and cash out your private lender.
Right.
Another way you can do it is, let's say that Your institutional lender is giving you 80% or whatever. Well, use the institutional lender and then put your private lender in second position
Sure.
to cover the gap funding,
Right.
to where you don't have to come up with any money. Now, some primary lenders, institutional lenders, don't want there to be like a secondary note, right? So in that case, my real estate attorney just does two separate HUD closings, right? We got one HUD closing,
Sure.
institutional lender, and then I have a separate HUD closing for the private lender. So regardless of as to how you structure that, you don't have to bring any money out of your pocket, right? You don't have to bring any money out of your pocket. Now, here's another big thing about private money: fast closings, Matt. All my offers, I tell, particularly my off-market houses, I tell them I can close in 7 days. 7 days. And I think the best my local bank ever got when I had my line of credit was like 3 to 4 weeks, because they were having to do appraisals. Sure. In this world of private money, there's never an appraisal. There's no appraisals. We used a CMA from my realtor, and I got 47 private lenders right now funding our deals. And out of the 47, not one of them has ever asked to see an appraisal, right? So again, you're just really in the driver's seat here.
What would, if you are not confident about doing this, you've done hundreds of deals over 20 years. If you wanted to do your first deal, how would you prove a track record? How would you convince somebody that without an appraisal, they can trust you?
Sure. Great question. I get it all the time. So there's a couple of things. Here's a writer downer for what you would say to a private lender, particularly if you're new. If I don't pay you, the property does. What does that mean? That means I'm not borrowing unsecured money. Right. They are getting a deed of trust. They're getting a promissory note. I'm naming them on the insurance policy as the mortgagee. Sure. So even if there's a insurance claim against that property, insurance company is going to make the check payable to them, the private lender, and to my company. I name them on the title policy as an additional insured in case there's any title issues down the road. And all the documents are drawn up by my real estate attorney. So in addition to that, is that, when you're starting out and it's your first deal, I would probably recommend you be doing that deal with somebody that knows the ropes and has done quite a few deals. So you can joint venture on your first deal or 2 or 3 with an experienced real estate investor, sharing the profits for them to hold your hand, right? Regardless of whether you're using private money or not, don't start doing this business the way I did. Okay. Get a mentor, get a coach, that knows the ropes and is still active today. Right. Because how I find my deals is very different today than it was even 3 years ago. I've had 7 leads come in today in my little teeny tiny market of only 40,000 people. So if you're going to leverage, that's called leveraging a business relationship. So, Matt, how many deals have you done? I'm role playing here. Matt, how many deals have you done? Well, you've not done any, but your business partner, Jay Connor's done 475. So you can actually truthfully say, well, me and my business partner have done 475, right? He's your business partner. Right. You're leveraging that relationship.
Right. What's the difference between hard money and private money? I know people on the podcast, they understand, our listeners understand hard money. What's the difference between private money and hard money?
Well, the list is long, so I'll go fast. Number one, hard money. The first big difference is the interest rate.
Yeah.
The interest rate. So a hard money lender most of the time is a broker of money. They've gone out and raised private money for their hard money fund. Right. And then they lend that money out from their hard money fund. Right. So listen, COVID came along March 2020. All the hard money lenders shut down, gone. So I had more private money starting to chase me right after COVID started than ever before. Prior to COVID, there was $18 trillion in cash available sitting in people's retirement accounts that could be used as private money. Today, on this side of COVID, $31 trillion
Wow.
available in cash. So interest rates. So let's assume the hard money lender is in business, or lenders are in business, right? Today, did you know the average hard money lender interest rate is 14%?
Wow.
Some are less, some are 11.5, some are 12, some are higher. So the interest rate's a big difference. I've been paying my private lenders 8% ever since 2009, and they love it. They love it. Where else are they going to get this, real estate backed return? So the interest rate's a big difference between hard money and private money. Secondly, there's this thing called points and origination fees. So your hard money lender is going to charge anywhere from 3 points to 4 points. That's a percentage point rate of the amount financed. So if you're only borrowing $100,000, you got to bring to the closing table $3,000, $4,000 in just points, right? So you got a higher interest rate. I mean, private lenders are at 8%. I have never paid an origination fee.
Wow.
I've never paid an origination fee to my private lenders, right? They just get a straight 8%. Then there's this third thing. By the way, in the world of hard money, you're already up to like 18%, 14 plus 4 points, right?
Yep.
Then there's this thing called extension fees. Well, you see, a hard money lender is typically going to set the term at either 6 months, 9 months, or 12 months. They're not going to set the term of the note out as long as a private lender would. Well, if you've not cashed out in 6, 9, or 12 months, and you've made your payments on time, they will probably extend your note. But what do they want? More money. So I know one hard money lender, to extend for 90 days is another 3 points.
Wow.
That's another 3%. So you're already up to 20%, 21% in the first year of borrowing the money. There's never any extension fees with private lenders. So the fourth reason I love private money is because the amount of money that I can get advanced at closing. So as you just said, your institutional lender is going to loan you 80%, 85%, of the value. Well, private loan, I'm going to get 100% of my purchase price, 100% of my rehab, all up front, right? And most of the time, there's even some extra equity I could pull out up front. Right. I love the phrase on my real estate attorney's check stub that I pick up. I always get money when I buy, right? So I'm at least going to get all the rehab money up front. And so I pick up the check and it says excess cash to close. I love me some excess cash, Matt, right? I still, my attorney's office is right next door. That's convenient. Been with the same firm since 2003. And they say, Jay, why do you spend time going and picking up checks? It's fun picking up a $50,000 check.
It sure is.
Last week I picked up a $149,000 check. It's just fun picking up those checks. I mean, private money will fix your cash flow and help your sex life. It just makes everything better, right? You even sleep better, right?
Indeed.
So more differences. That's the advance. And again, I mean, you're setting the rules, right? You're setting we're not begging for money anymore.
Yeah.
We're not asking for a mortgage. Yeah. We're offering a mortgage.
Yeah. And you're finding that 8% is still attractive in an environment with 4.5% 90-day treasury bills or whatever. It's better than people can get in a stock market option with volatility and everything else.
On commercial properties, I've got friends, real estate investors that are raising money for like big self-storage projects and stuff. Their syndication is paying 6 and 7%.
Yeah. Yeah. What about doing this for yourself? If you're sitting on a couple $100,000 of money in your own retirement account, can you flip it into a self-directed IRA and then start lending yourself money on real estate deals?
Well, that's called self-dealing. So it's against the law. The IRS.
That's good to know.
The IRS is not like that. So you can't loan money to yourself from your IRA. However, you can take retirement money, move it over to a self-directed IRA company, and now you can invest that money in a house and flip that house.
Got it.
So your own personal self-directed IRA account can flip a house and earn, $78,000, either tax deferred or tax free. I mean, think about that. $78,000 tax free on one deal. Of course, you would have to have a Roth IRA in your self-directed IRA. I can't do that, but at least, if nothing else, it's tax deferred.
Right. Absolutely. What do you do generally on your deals? Do you hold them or do you exit the deal?
It depends on how I bought it. So that's a great question. So here's a writer downer. Buy with cash, cash out. So if I'm like here in my market, just due to rental rates and stuff, it would be difficult to hold long term with private money. I would need to like refinance to the institutional money.
Right.
But so my rule of thumb is when I buy with private money, I'm going to cash out. But if I buy on terms, meaning the seller, the off-market seller, I'm not buying from a realtor in this scenario. When the off-market seller will sell to me on terms, such as with seller financing, or I've bought a ton of houses subject to the existing note, which for the sake of the audience just means the seller agrees to sell me their house, leave the mortgage in their name, and I agree to make their mortgage payments. I'm not assuming the note or anything like that. I'm just agreeing to make the payments. So I buy the house subject to the existing note. That's buying on terms. So then I'll turn right around and I'll sell it on terms on our rent-to-own program, and I'll collect a large non-refundable lease option deposit from the tenant buyer, and then it's on rent-to-own. No repairs are on me after 30 days. I could do a whole podcast on why sell on rent-to-own. But anyway.
I'd love to do that podcast.
Okay.
So you do the rent-to-own, and then you take a large down payment, and then they're paying in excess of the note that you have to pay for that.
Absolutely. Yeah, I've got a positive cash flow. And the great thing about buying on terms on my lands, so I'm inheriting their 3.5%, 3%, 4%, 4.5%, 5% mortgage from that, that's what I'm paying on their mortgage. So I can really get some nice cash flow when I'm buying subject to the existing note, because again, I'm inheriting like a 4% mortgage.
And are you familiar with which types of mortgages will allow you to either take over that note and pay for it yourself, or is that not an issue because you're actually it's just a private deal on the back end where you're paying for it still in their name?
Well, let's talk about that. So every mortgage that I am aware of in the United States have this thing called the due on sale clause.
Right.
And what the due on sale clause says is that if and when the owner of that property transfers ownership, which they do on a subject to deal, if they transfer ownership, the mortgage lender has got the option and the right, but not the obligation to call the whole note due.
Right.
So I've done hundreds of those. I've got over 2,000 real estate investing students across the nation. I know of 2 instances that they received letters from the bank, and in essence, the letter says, "We know the ownership has changed hands," and they said, "We may call the note due." They never did. I can tell you, the bank doesn't want the house back.
Right.
That's very expensive. The only thing the bank wants is the money. Right. But there are some nuances and some very, very important steps on how to do that transaction correctly to where you're protected and everybody else is protected.
That's the same due on sale clause that people ask about when they deed a property from themselves to an LLC. And I've never heard anybody have their mortgage called, the full payment for the mortgage called. But everybody asks about it. Everybody asks. If I go down to the assessor's office or to the county clerk's office and I make that change into a LLC with a quit claim deed, am I going to get called due on sale? The answer is I can't tell you that you won't, but it has never happened that I've ever seen. So a similar type deal.
But let's go down that road one step further. Or what could you do if they call it due? If they call it due,
call a private money lender.
Exactly. Refinance it with your private money.
So what's the first step? Sorry, in the worst way. No, go ahead.
I was just gonna say, and the worst thing that could happen is you deed the property back to who transferred it to you. But you're not going to have to do that. You're not going to have to do
What's the first step for our listeners that want to get started doing this? Not moving their money to a self-directed IRA and then lending it, not being the private lender, but if they want to get private money funds, what's the first step to teaching somebody else how to do this?
The first step is learning the program. Now, it's your program. You can put it together. I say just duplicate mine. I've got a lot of real estate investors across the nation have just duplicated my program to raise their own private money. So how do you learn what the program is? Well, the first step is to download my private money guide that'll get you on the fast track to private money. So, Matt, we can give that URL out now or when we get to the end, whatever you want to do.
jconner.com with an E, Conner, CONNER.com/money guide. We'll get you that PDF download. And that's awesome. That's an awesome PDF download, by the way.
You got it. So the name of it, the name of this private, I'm telling you that to get you on the fast track to private money. The name of this download is 7 reasons why private money will skyrocket your real estate business and help you build incredible wealth. Listen, my business tripled in 2009 because I had access to the funding when I was cut off from the bank. If you remember in 2009 that all these foreclosures were on the market and the banks weren't loaning money. Now let's stop and think about that. They got all these foreclosures. They're not lending money. You got to have the money, all the money to buy the foreclosure, unless you're buying it subject to the existing note directly from the person facing foreclosure.
Also
we're doing a
idea.
lot of that right now. We're buying a lot of houses subject to the existing note directly from the people that are facing foreclosure. But anyway, when you have, stop and think about it. How many more offers are you going to make when you got $500,000 burning a hole in your pocket to go buy more properties, right? In fact, I've got a big problem. I've got more private money than I can use sitting on the shelf, just waiting for me to put it to use. So I'd rather have that problem than no money or no funding. And Matt, I'm going to say something right now. I bet you have heard this said 100 times by other people. And it's the most stupid thing I ever heard in my life. So have you heard it said, oh, just get the deal under contract. The money will show up.
For sure.
Because the money follows the deals.
For sure.
Where is the money going to show up? Is it going to like rain out of clouds or something, And so it's like, that's the most stupid thing I ever heard. So there's always deals. There's always deals. I say, get the money lined up first and you'll make more offers. Think how much more confident you're going to be in making offers when you got this boatload of money just waiting for you to go. And of course, Matt, with your institutional lender, I know you feel that way because you got a great relationship with an institutional lender.
But it still takes 30 days and an appraisal and half a point origination fee or 1 point origination fee and a down payment and everything else that comes along with institutional with banks lending.
Exactly. So, shoot. It's going to happen again. I don't know when, but it's going to happen again. It's already happening. The institutional lenders are tightening up. They're tightening up, even with their long-term relationships. And private money is more plentiful now than I've ever seen before.
If the Fed raises rates again in May, there's certainly the commercial rates are going to be higher than 8% anyway. So if you can do it at 8% with private money with less terms and less down and fewer points on origination, then you're in the money from the start.
Or no down and no points.
Yep, exactly. How do you find existing private lenders? So if you don't want to go the route of teaching people the system, creating the system and teaching them, how would you just find somebody in your market that's already a private lender?
Well, I can tell you the way not to do it.
Okay, good start.
So when I first started, I hired my real estate attorney's paralegal to search public records looking for deeds of trust. So we're in a deed of trust state here in North Carolina. Most people call it a mortgage, but looking for deeds of trust on public record showing individuals' names, not LLCs, not companies, but individuals that were loaning money out backed by real estate, right?
Cool.
In 90 days, we found 2 people. So I said, well, there's got to be a better or a better way than that, right?
Yeah.
So I actually, we got some very sophisticated software people that write software. And so we put together, this was actually launched in 2011. It's called my private lender data feed, private lender data feed. And what the private lender data feed is every month we update the data feed to where we get every private lender loan that's closed in the nation, and we got their contact information. We got the interest rate that they're getting on the deal that they closed on. And you'd be amazed. A lot of these people are still happy at 6%, 7%, et cetera.
Sure.
And so you can go into the data feed and search by zip code and put in your zip code, search there, see what you got. And so you can locate the private lenders anywhere in the nation. We get over 12,000 note closings a month that private lenders are funding, individuals just like us. But there's another way that's really, really cool. So here's a writer downer. This is worth you getting here on the show today. So self-directed IRA companies. So Matt, do you mind if I give out the company that I recommend all my new private lenders to?
Yeah.
So they're the best. I have no ownership. I have no relatives. I have nothing at this company that I'm going to tell you about. But customer service is amazing. The name of the company is questtrust.com out of Houston, Texas. And they've been in business now for over 20 years, 25 years, something like that. They have buku's money under management, but they're a self-directed IRA company that I refer all my new private lenders to that are using retirement funds to transfer over and open up an account. Well, Quest, the 4th Wednesday of every month, has got a Zoom networking event, and it's free. It's free for their account holders to come to. It's free for Matt, you to come to. It's free for me to come to. Anybody can come. Just go to their website, questtrust.com, and you'll find their monthly networking Zoom party. Well, did you know over 70% of account holders at Quest Trust want to loan money out to you?
As you might expect, that money's not doing anything when it's in that account.
They want to loan money out to you. They don't want to deal with finding deals, negotiating deals, overseeing rehabs, all that stuff. And with it being a retirement account, they're much more open to those long-term notes, right? And so you go to the networking thing. I think it's at 6 o'clock or 7 o'clock on maybe 6 o'clock Eastern time, 7 o'clock Eastern time, the 4th Wednesday. Anyway, you go there and they'll put you in breakout rooms and you can network with these people. Now, here's the trick, though. Here's the trick. You're not going to be teaching them your private lending program. They're already private lenders.
Right.
They're already doing it. So this is going to be a get to know you meeting, and they're going to tell you what they are accustomed to getting. Now, when they're accustomed to getting 7%, I don't try to talk them into 8.
Right. Makes a lot of sense. You got to give them 9. Just kidding.
So, check that. So that's where you find existing private lenders.
Right. That's really interesting. Questtrust.com out of Houston. And the people that are there have already put their money. They're just waiting for a deal that they can fund.
Yes.
For you. Brilliant.
Yes.
That seems like by far the easiest way to do it. You don't need to put together a whole spreadsheet. Private,
but again, you're not making the rules. You're negotiating now.
Sure.
Right.
Is it worth it in that meeting? Is it worth it to say to them, I've got a deal that I'm looking, I've got a deal that I have available for you to fund?
Absolutely. So in that case, you're not going to separate the conversation of teaching your program and a deal, because you ain't going to teach them your program. Right. You're just going to network with them. And if you got a deal to run by them, now this is more like a pitching thing, right?
Right.
So I don't pitch my warm market. They just do what I tell them, right? But in this world where you're talking with existing private lenders that have already done it, right, then it's going to be a little bit of a different conversation.
I love it. Jay Conner's a real estate legend and a font of knowledge. He's been buying and selling houses since 2003, and he's in Moorhead. That's 40,000 people, but he's averaging $71,000 of profits per deal. Pretty amazing. Jay's raised $8.5 million in private money to rehab over 450 houses and has been involved in over $52 million in transactions. He's a national speaker on the topics of private money, automation, foreclosures. He's also a best-selling author of Where to Get the Money Now. And we're going to talk to you about that in just one second. He's a leading expert on private lending, marketing, business development, and a past president of Business Networking International, which we love on this podcast. We love BNI. I'm a past president of our local chapter. I've been a member for 5 years. It's a great, great organization. If you haven't heard of it.
And by the way, I've raised a lot of private money from BNI.
Makes sense.
And so here's the deal. Not directly, I didn't raise that much directly from my members, but remember, in BNI, I love BNI. Those are my team members. So they're out telling people if you're sick and tired of, the low rates at the local bank, or you're sick and tired of the volatility of the stock market, there's this friend of mine, Jay Conner. He can get you high rates of return safely and securely. So they refer me
real estate.
Yep.
I love it. I love it. Jay and his wife, Carol Joy, live in Moorhead City, North Carolina. Check out his podcast, Raising Private Money with Jay Conner. And also a free gift for our listeners. Go to jayconner.com/money guide. That's JAYCONNER.com/money guide to get that PDF download that we talked about earlier. And a great recommendation is to go to questtrust.com, which is the self-directed IRA company out of Houston. The fourth Wednesday of every month, they've got that Zoom networking meeting. If you've got a deal and you want some private money lenders to help fund that deal, that'd be a great place to do it. I'll certainly be on that podcast. Jay, we appreciate you being on the show so much. Thank you for your time.
My lands, Matt. What an awesome host that you are. I love your podcast. Thank you so much for having me on. And hey, have me back. We'll talk about subject to deals.
Absolutely. Take care.
See ya.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.